Hello, everyone. How are you doing? Okay, so as you can see to the upper left of my screen, today I'm going to be talking about uh, what is a leverage? How do you calculate leverage? Is it important to have big leverage? All right, so this is video 6 continuation, right? So in video 6, I talked about pipette, and lot size, and then how to calculate pip and lot size, right? But then I forgot to add leverage. So I'm actually making this video now to explain what leverage is to you and how you can calculate leverage, and then decide if it is important for you to have account with big leverages or not. Right, exactly. So quickly, what do you understand by leverage? Okay, I know when you want to open a trading account, even in the Pepperstone, I explained to you the broker is going to ask you what type of account do you want, and then it's going to ask you to choose. The broker is going to ask you to choose different leverage options, right? And then you have the biggest leverage for Pepperstone or standard account, I think is 1:400. Right. So you have 1:400, there's 1:200, I believe, and there's also 1:100, right? And also, for those of you that want are trading prop firms, if you want to go for the standard prop firm account, which is not the swing, you have I think you have up to 1:200 or 1:100, right, leverage. And then if you decide to go for the swing account, I think FTMO is going to offer you a 1:30 um, leverage on a swing FTMO account. I think some other prop firms offer like 1:60 for swing, right? But then this leverage 1:100, 1:200, what does it mean? I know quite a lot of you don't even understand what this is, and you just always decide to go for the highest leverage possible, right? So you go pick what kind of leverage and you just choose the highest. So what does it really mean, right? So I wrote in my note here that leverage allows us to have more buying power. All right, but then quickly let's head over to Google and let's see what definition of leverage is. So we can say, what is leverage in Forex? Okay, and we can see here. Okay, so leverage in Forex is a technique that enables traders to borrow capital in order to gain a large exposure to the Forex market with a comparatively small deposit. So what this means, let's go again. The definition says leverage in Forex is a technique that enables traders to borrow capital in order to gain a large exposure to the Forex market with a comparatively small deposit. So what this means is the amount of money you are going to be depositing, if there are no leverage possible, you might not be able to use that kind of money to trade. You understand? So you will not be able to use that kind of money to trade in the Forex market. So some of you, deposit about, let's say, $50, $100. This is a very, very small amount of money compared to the amount of money that goes in circulation in the Forex market. So because of the advantage the broker gives us, we can now leverage, as it says, have access to a big capital, as a big amount of money in order for us to be able to trade. And in order for you to have access to the leverage, you need to have a funded account, right? So if you fund $50, if you fund $100, if you fund $200, then you'll be required to choose a leverage you want for that your account. But then what is this leverage, and so what does it mean, right? So the way I see it, I believe that leverage allows us to have more buying power or more trade power. As you can see here, leverage is in Forex is the techniques that enables traders to borrow capital in order to gain a large exposure to the Forex market. You understand? So that is the way I um, see what leverage is. So if I fund my account now and I'm required to choose a leverage, and I choose a leverage of 1:400, that's a big leverage. Right? So what does it mean? Okay, we're going to talk about that. All right. So, um, so when I say that the leverage allows us to have more buying power, let me write it down here. So a leverage allows us to have more buying power. Already from the definition, you can see it says in this area that a technique that enables trader to borrow capital in order to gain larger exposure. So now your account is not only exposed to the, is not only limited to the amount you funded, right, which is the $50, right? But because you've chosen a leverage, you now have access to a larger exposure to the Forex market. All right. So in a nutshell, what am I trying to say? So you can just understand. So the one thing this is what I want you to understand, that a leverage allows you to have more buying power. And then when I say more buying power, what does it mean? Right? What does it mean to have a more buying power? Okay. So let me give you an example of what I'm trying to talk about. Okay, let's just change this back to the original color, which is this one. Yes. Okay, so let's say for example now you want to so I'm going to number two now, which is how to calculate leverage. So let's say you fund your account now with $5,000. Okay, just an hypothetical example now. You funded your account with $5,000. Now the broker is asking you to choose a leverage. Okay, the broker is asking you now to choose a leverage. So now we have different options. So a funded account, let's start with a funded account of as 5,000. Okay, or no, let's say you fund your account with okay, let's say $5,000 now. Okay, so a funded account, forgot to put account there, a funded account of $5,000. Now, when you want to choose the leverage, you're going to see different options. Your broker is going to give you different options, which is uh, we have leverage of 1 to 100, 1 to 200, 1 to 300, 1 to 400. So let's say you choose a leverage of 1 to a leverage of 1 to 10. So a leverage of 1:100. Let's say you go for the a leverage of 1:100. So what does this mean? Remember, I said a leverage allows you to have more buying power. So you funded your account with $5,000 and you chose an account leverage of 1 to 100. So now how do you determine your buying power? What is the max buying power? What is the highest buying power you have? In order to get that, you have to multiply the account, the capital you funded, multiplied by the leverage, right? So you're going to multiply $5,000 by 100. Okay, so in order to determine the buying power, right, we multiply the amount funded by the leverage, by the leverage chosen, okay? Because you're going to choose, right? So in this case now, you chose a leverage of 100. So that is going to be $5,000 multiply by 100. That's going to give you your max. It's going to equal your max. That is a maximum, okay? It's going to give you your max buying power. So that's a maximum buying power, right? So if that's going to give us a maximum buying power, by the time we multiply 5,000 by 100 now, so if we multiply 5,000 multiplied by 100, that's going to give us what? That's going to give us 500K, right? That's going to give us 500,000 buying power. So that's going to give us 500,000 buying power. Okay, so now what does this mean? Because your buying power is going to equal your lot size. Okay, buying power equals lot size. I think I need to put that also so you can see it, because buying power equals lot size. Okay, that's it. So when I say max buying power, max lot size, that's it, because leverage is telling you, if you choose this leverage, it's going to tell you what the max lot size is going to be. That's what leverage, that's the idea behind it. Okay, if you have a funded account of 5K and you choose a leverage of 100, what you're saying is your max buying power is going to be 500,000 buying power, and buying power equals to lot size. Now, if we are going to convert this 500K now to lot size, what is going to be the max lot size you can use for that account? Okay, remember, you understand what lot size is, and I've explained to you how to calculate lot size, right? So now, if you fund your account with $5,000 now, with a leverage of 1 to 100, what is going to be the maximum lot size you can use for that account? And in order to get that, you need to first know the leverage. You multiply it by the funded account, which is going to give you 500,000 buying power. Now, we know that one standard lot equals to 100,000 units, right? So I'm going to come back here again. Let's come back to Google. Okay, and we can say we have it here. One standard lot equals what? So a lot size of 1.0, right? 1.0, that's a standard lot, is a standard lot, right? So 1.0 lot size. So 1.0 lot size equals what? Let's come here and let me show you this. So you can see 1.0 lot, that is a one standard lot. 1.0 is a standard lot. A lot is just some currency units. To know the size of a lot, you should understand that one standard lot, which is 1.0, equals 100,000 base or account currency. So now in this area now, yeah, you actually funded your account with $5,000, but because you chose a leverage of 1 to 100, you are trading with an account of $500,000. And now we know that one standard lot, which is 1.0 lot, equals to $100,000. So now you actually now have a 500,000 buying power, which means if 1.0, so if 1.0 lot size equals 100,000, okay, what is going to now be 500,000? That means your max lot size now. So if 1.0, let's do a quick math now. So if 1.0 lot equals 100,000 lots. So now we're not going to say what that means. We can now say, since we want to get the lots now, that's going to be equal 500,000 buying power. We can now say X lot, okay, equals 500,000. So now we want to get what lot is going to give us 500,000. Very simple, simple mathematics, right? All we do is what? We cross multiply. So we're going to multiply X times 100. Now that's going to give us 100,000 X, right? Equals to um, 500K, right? 500K. Let me confirm quickly. So it's going to be 1.0 multiplied by 500,000. It's going to give us 500,000 exactly. So it's going to be 500,000 lots. Okay, it's going to be 500,000 500,000 lots. So you know what next are we going to do now? We're going to divide both sides by what? 100,000. So if we divide both sides by 100,000 now, so it's going to be 100,000 okay, divided by 100,000, that's going to give us X. So X now is going to equal 500,000 divided by 100,000 is going to give us 5. So that's going to be equal, it's going to equal, so X is going to equal 5 lots. Okay, so that means the max lot we can use on this account is going to be, so a funded account of $5,000 with a leverage of 100. So let me write it down now. So a funded account now, therefore, a funded account of $5,000 with a leverage of 1 to 100 gives gives a maximum lot size of 5.0 to be used. Exactly. So this is what this means. Okay, that is what this means. So in summary, therefore, a funded account of $5,000 with a leverage of 1 to 100 gives a maximum lot size of 5.0 to be used. Now, what this means is this is the highest lot size you can use on this trade. That is how to calculate leverage and then determine what kind of trader are you. If you're a scalper or if you're a lower time frame trader that usually make use of big lot sizes, because the truth is the bigger the stop loss, the smaller the lot size. I'm sure I've explained that to you guys a lot of times. The bigger the stop loss, the lower that the bigger the stop loss, the smaller the lot size, and the smaller the stop loss, the bigger the lot size. So let me write that down also so you can catch that. So the bigger the stop loss, the smaller the lot size, and the smaller the stop loss, the bigger the lot size. That's what this is. Okay, so that's it. If your stop loss is big, your lot size is going to be small. If your stop loss is small, your lot size is going to be big. So for example, now, just to explain all of this now, I'm going to give us an example of, let's say we want to buy Euro USD now. So you want to buy Euro USD with a stop loss of the lowest stop loss we can have that I can have on the trade, even though I'm trading on a lower time frame. Let's say 3 pips of, let's say 5 pips minimal. So if I'm having a very small stop loss of 5 pip, so now I have a stop loss of 5 pip. So how do I now determine the lot size I want to use? So let's say I want to risk, I have a funded account of $5,000. I want to risk 10%. Just giving you an example. So 10% of $5,000 is going to be what? So 10%, that's going to be 10 divided by 100 multiply by 5,000. That's 500. So 10% of 5,000 is 500. So I want to risk $500 on a trade. Now, on that trade, I'm risking $500. The stop loss for the trade is 5 pip. Now, how do you determine the lot size now? I've taught you how to calculate lot size. All you need in order to calculate your lot size is the amount you want to risk, the value per pip, and the stop loss in pip, right? So what is the value per pip for Euro USD? The value per pip for Euro USD is 10. That's it. The value per pip for Euro USD is 10. So what we're going to do is we're going to now have, how much are we risking? We are risking 5. Again, if you do not understand how to calculate the lot size, there's a video there in the phase one group. Just go there and watch it. All right. I've sent you the video also. Just watch it. You should be able to just refresh your memory on how to calculate lot size, right? So I don't want to talk about this all over again here. So it's going to be how much you're risking, which is 500. Then we're going to divide 500 by what is the value per P for Euro USD? 10, right? The value per P for Euro USD is 10. And then we'll multiply 10 by the stop loss. The stop loss in PEEP is 5, right? So it's going to be now 500 divided by 50. right? So how do we get the lot size now? So 500 divided by 10 times 5 is 50. That's going to give us 10.0 lots. So now, because of the leverage, you have a leverage of 1 to 100, you will not be able to place this trade. See it now, because you're risking a big amount of money, which is 10% of your account, and the stop loss is very small. That is why you will not be able to use this lot size. It will not be possible for you to use this amount of lot size. So let's say you chose a leverage of 400. So let's now say you chose a leverage of 400, 1 to 400. What is going to be your maximum buying power? It's going to be 5,000 multiplied by 400. So 5,000, okay, multiply it by 400. Okay, that's going to give you a buying power of what now? This is 2 million. This is 2 million buying power, if I'm correct. 1, 2, 3, 1, 2, 3. Yes, 2 million buying power. So now, what is going to be the maximum lot size you can use now? Still on this same 5K account, but you've changed the leverage to 400. So now you have a buying power of 2 million. What is going to be the maximum lot size? It's very simple. One standard lot equals 100,000 buying power, right? So it's going to be 2 million divided by 100,000. So 100,000, 20. So the maximum lot size you can use on this same account of 5,000, but a different leverage of 1 to 400 is now going to be 20.0. That's the max lot size you can use, 20.0. You see it now? So yes, you can risk $500, 5 pip, and you can go in with 10.0 lot size. Your leverage can allow it. So you see now, this is what leverage does. So if you are a scalper, then you want to go for bigger leverage. If you trade all this very lower time from very, very small stop loss, because like I said, in this area, the bigger the stop loss, the smaller the lot size. So in this case now, the lot size to be used here was 10, 10.0, right? That's 10.0 lot. That's because you have a very small stop loss and your leverage is 1 to 100. Maximum lot is 5. You cannot use this lot size. So now let's say, for example, the stop loss now increased from 5 to 30 pips. So let's say the stop loss now changed from 5 to 30 pips. It's going to be 500. It's still going to be the same. 500 divided by the value per pip is still 10, but now it's going to be multiplied by 30. See it now? So it's going to be 5 multiplied by 30. 10, oh no, 500 divided by 10 times 30 is going to give us 300, right? So it's going to be 500 divided by 300. 1.66. Are you seeing it now? 1.66. So the lot size to be used here is going to be 1.67 lots. And then the maximum lot size you can use is 5. So yes, you can place this trade. Your leverage allows it. You can place this trade. So you see, when the stop loss was small, the lot size was big. When the stop loss was big, the lot size was small. So there's an inverse relationship between stop loss and lot size. The bigger the stop loss comes with a smaller lot, the smaller the stop loss comes with a bigger loss. So there's an inverse relationship between, I've forgotten, there's a topic in mathematics that talks about inverse. This is inversely correlated to something. I've forgotten what topic that is, but that is what we have also in this area. So if you use a small stop loss, you're going to have a big lot size, still risking the same amount. So this is what leverage is all about, and I hope you understand. So if you want to go for some prop firm account, it's going to ask you, do you want a swing trade? Do you want a swing type of account or a standard account? If you choose a swing account, they will give you a leverage of 1 to 30. So if you have a leverage of 1 to 30 now, so let's say the leverage you go for an account size of $5,000 now, or let me give you another example now. Let's say a funded account of $10,000 now. Let's say you bought let's say you have a $10,000 account, and then the leverage on this account, the maximum leverage is 1 to 30. So a leverage of 1 to 30. So now what is going to be the maximum buying power you have? So it's going to be 10,000 multiplied by 30. Okay, it's going to give you your maximum buying power. So 10,000 times 30 is going to give us, think about, let me see, about three, let me just be short, 10,000 multiplied by 30. So you have a buying power of 300K. So you have a buying power of 300,000. That is 300,000 buying power. That's it. You have a 300,000 buying power. So now you have this. So now what is going to be the maximum lot you can use on this 10K account? You should be able to find that now. In order to get the maximum lot, all you have to do is first know what is the maximum lot for a one standard lot equals to what? 100,000 buying power, which is what you have here. One lot equals 100,000 buying power. So if you have a 300,000 buying power, the maximum lot size you can use on this account is going to be 3.0 lots. So for that account now, the max lot you can use is 3.0. So depending on how you're trading and what kind of trader you are, can you use 3.0? So if some of you that are going for a prop firm account, you have to risk a very little amount of money. You cannot risk 10%. No, you cannot risk, because I think the maximum daily drawdown maybe 5%, and then maximum drawdown 10%. So to not be reasonable for you to risk 10%, right? So maybe some of you want to risk 1%, 0.5%. So let's say you want to risk 1%. 1% of 100,000 of $10,000 is going to be what? Let's do it together. So that's going to be 1 divided by 100 multiplied by 10K. 10, 1, 2, 3. Times the maximum you can use is $100. So if you're risking $100 on a trade, let's say Euro USD, for example, now, the stop loss is 5 pip. So let's say you go in with a stop loss of 5 pip. So it's going to be 100 you're risking divided by 10. The value per pip is 10 times 5. That is 50, right? So it's going to be 100 divided by 50. That's 2. So you can use 2.0 on that trade because the max lot size is 3.0 leverage. So if anything below 5 pip, and beside, it's not every time you catch a 5 pip stop loss trade. So majority of the time, stop losses are between 10 to 26 for me, between 10 to 26. So it doesn't not even have to do with you going for very big leverages, because if you go for a leverage bigger than 1 to 30, 1 to 100, 1 to 200, 1 to 500, 1 to 700, still going to be the same depending on my own style of trading, right? So in order for you this is what leverage is all about, and this is how to determine what leverage is best for you. That's going to determine what leverage is best for you, right? So if you are a swing trader, you want to hold trades for long, right? I mean, so I think the reason why they reduce the leverage for big account for those that want to swing is because they feel if you are a swing trader, that means you want to hold trades for many days, you are going to be using a very big stop losses, right? But actually, we can scale down to lower time frame, just like what I did for NASDAQ, right? My NASDAQ buy that lasted for 12 days, right? It was from a lower time frame, a 1 hour with a very small stop loss. Think about $3 stop loss for the lowest lot, right? And then we just took that all the way to the upside, right? So this is how to calculate your leverage. And then the last question is it important to have a big leverage? So now, is it important to have a big leverage? Well, I would say for me, no. But for you, determine what kind of trader you are and what is your stop loss range. You can only know that if you usually keep track of your trades. So what is always your range of stop loss. Mine is always from 30 to 26, around from 30 to 26. It's just in some rare cases, I get to 30, I max it all out, right? But majorly is between 10 to 26, 10 to 26. So if I have that kind of stop losses on my trade, I'm okay with a 1 to 30 leverage. Depending on the amount of depending on the amount I'm risking per trade. Because if I'm risking a bigger amount, bigger than 500, definitely I might need to have a much more bigger leverage, right? So this is what leverage is all about, and this is how you can calculate it and then determine if what kind of leverage you want to choose for your account, right? Definitely. On my Pepperstone account, I have a big leverage. That's it. I have a big leverage. So I can, but then do I max out the leverage? No, because on my Pepperstone account, I think I have a leverage of the biggest leverage possible because then I think I had no idea. So I just choose the biggest leverage, just like how everybody do. Once you fund your account, you go for the biggest leverage, right? But then do I actually need it? No. Have I ever maxed it out? No. Because if you have a leverage of 1 to 400 now, right, 1 to 400 on a 10K account. So let's say a 10K account leverage of 1 to 400. What is going to be by max buying power? It's going to be 10K multiplied by 400. So I have access to $4 million buying power. So now if I'm going to divide this by 100K now, divided by 100K, my maximum lot size I can use for my account is 40.0 lots. You see? So that's big. That's very, very big. And since I funded my account on Pepperstone, I have never maxed it out. I don't think I've ever used a lot size of 40.0. So no. So you see, so that is how to calculate leverage and how to use it in order to determine what leverage is best for you. If you have any question, please feel free to drop your questions in the uh, question group and I will return to it, or you can send it to me directly if you are a private student. All right, so that's going to be the end of this. Uh, thank you. Do have a good day. Bye-bye.